Hello, hello. Welcome back.
Hello and welcome.
Welcome back to Living Richly with Curo, episode 34. We were just talking about how amazing it is that we've been doing this the majority of the year with you
Yes.
all, and we look forward to keep them coming in 2025. So, welcome back to another episode. My name is Ann McCabe. I am the CEO and a partner here at Curo Private Wealth, and I'm joined, as always, by my lovely partner, Atrisa.
Hello, I am Atrisa Roberts, COO and partner here at Curo.
Absolutely. And every week our goal is
Mhm.
to inspire, educate, empower you on your financial journeys. And this week we're doing a little holiday episode, a little holiday special episode entitled Holiday Family Survival Guide Financial Styles. So, we are going to arm you with some actual data and actual information for when your Aunt Betty starts drinking and starts talking crazy about the markets and the economy. You can pull out some data and combat Aunt Betty. So, we will get into that. That is, by the way, why I am wearing sequins for
And
you
I was
all,
going to
just to
say,
keep it holiday for
yes,
you.
you look great dressed for the occasion. I feel a little jealous that I didn't put on some sparkle today.
Well, you look amazing though, as always. So
Oh, well, I
all
appreciate
good.
that. But yeah, you
Yeah,
look you
all
look good.
good.
Love the jacket. Oh, I love
Thank
the
you.
holiday
It's so
festive
fun.
time.
I know. My 7-year-old said I looked like a disco ball this morning. So there's that.
We're going to take that as a compliment.
I guess. I
Yeah.
guess.
Yeah.
Okay. We'll take it as a compliment. So before we get into our survival guide, what's going on with you? A little ATM catch up. What's new and exciting in your life?
Yeah, I think the exciting thing is that I have a little short getaway weekend that was planned by my sister and my friends. I had mentioned a few weeks ago that I would have loved to go to Lake Tahoe for this music festival that's out at a ski resort the weekend before my birthday. But of course, year end is always a crazy time for us. So it was one of those things that was a very fleeting thought, like, oh, I should have done that. And then you realize that there's no way you're going to plan that kind of trip in 2 weeks. But my friends still wanted me to have something. So I won't say it was a surprise, but they kind of just like, okay, here's where we're going this weekend. And I was like, fun. So we're taking just a short weekend drive up to the Poconos to a resort for a short weekend getaway, which I am very excited about. So I think there's like some spa time, a nice dinner, and at least one winery visit on the
Ooh,
agenda is what I'm aware of. So I'm very excited about that little getaway that's coming
that'll
up
be
this
so
weekend.
fun.
Yep.
Oh, I
Other
can't wait to hear about it.
Yeah, I know. And it's funny because my friends laugh because I'm the only winter birthday in our like immediate
Mm.
friend group. And they were like, we always gotta like bundle up in the snow to go celebrate your birthday. But I love it. I love doing cold weather things for my birthday. Like some people are like, oh, let's go to the beach. And I'm like, no, let's go to a ski resort. Like let's
Yeah.
go do a winter thing. So they're probably not as excited as I am, but I'm really excited about it. I'll let you know how it goes.
Yeah. Okay. So when are you going to pack? Like you're leaving Friday, so you'll pack Friday morning?
Exactly. You know me. How long have we worked together now? You know
I
it'll
know
I'll get
you.
packed. I'll get packed Friday morning. I mean,
Yeah.
I may try Thursday night to just get ahead of it because I technically have some work to do Friday morning before we leave. So I don't want to push it to the very last minute and hold up the plans. So I may start Thursday evening, but yeah, most of it will probably happen the morning before we hit the road.
Yeah. Sounds about right.
Don't judge me, guys.
No, no judgment whatsoever.
Yeah, I want so badly to be one of those people who starts packing like days before their trip. I want to be that person. I'm not that person.
It's okay. Embrace who you are. You do have like your separate travel like toiletry bag. Isn't that something that
Yes.
you have? So that's pretty impressive. I wish I was that person that had like a whole separate toiletry bag ready to go anytime I
Yeah,
travel.
it's just because so much, and you and I do pretty frequent, especially short trips to
Yeah.
places. We're in Austin 3 or 4 times a year, it feels like at this
Yep.
point. And it got to the point where I realized I was just repacking the same things over and over again. So I do have pre-packed toiletries and pre-packed makeup. I have a travel
Ooh.
makeups. I mean, it's not all of it, but it's like the
Yeah.
base of what I need to get my makeup done on a trip so that I'm not redoing that every time,
Yeah.
which has been
That's
helpful.
smart. Yeah.
Yeah.
I need to think about doing that.
Yeah.
Then
Yeah,
the
it's been a
cheapskate in me is like, do I really want to buy all the things twice?
well, see, what I do is just buy the travel version of it, right? So,
Of
like my
all of them.
setting spray,
Yeah.
which I mentioned on a previous episode of our
Yes.
favorite things, I have the full size and I have a travel size of that. So that's really
Yeah.
what I do. It's not like doubles of all of the stuff that I use.
That makes sense.
Yeah.
All right. Well,
Anyway.
we expect an update on
Oh,
your
absolutely.
Poconos. I feel
Tell
like
you
you have
all
to
about
like
it.
say Poconos, with your
Poconos. Poconos. Yeah.
going to the Poconos.
It'll be fun. All right. So what's
Yeah.
new and exciting with you, my dear?
So you already know this, but I think the highlight of my last week is my sister-in-law and I, who both of us have two boys each, and we take my nieces on a shopping spree, is what we call it, every
Yeah.
year for the holidays. We give them money for Christmas and then just allow them to pick out whatever they want at the mall. And we've been doing this. The older niece will be 18 in February. And I'm pretty sure we started doing this when she was like 5. So it has been a long standing tradition. It is like one of all of our favorite days. And I don't have girls. So my boys are never interested in going shopping, never interested in any sort of girly things. Um, and it is just so much fun. The boys have come sporadically here and there, but this year it was just the girls, four of us. And, we go get lunch and we walk around and we go to whatever stores they want to go. So, we spent quite a bit of time in Sephora, as you can
Oh, yeah,
imagine.
I'm
And
sure.
yeah, but it was a blast, and I'm so proud of the young ladies that they are, and just love spending time with them, and love getting the boy updates and giving them some advice, and so it was a blast. So that was a huge highlight, and then, as you know, my little guy, my 7-year-old, made a hockey team, so he was very excited about that. I'm losing less time, you
Oh,
know.
you've got no time at this
I
point.
had no time and now I've got even less time. So there's that.
Now
But
you've got
he
negative time.
right, exactly. I'm just outsourcing a lot of the things that have to happen over the
Yeah.
weekend is how I'm getting it done.
Yeah.
But he was so, so, so excited and I'm really proud of him. He's been working really hard and practicing like outside of, the program that he was in. So
Yeah.
we're
That's
excited for
fantastic.
him. Yeah.
Yeah.
So those are my updates.
You're a full-blown hockey mom at this point. But you've shared with me the tradition with your nieces before, and I think it is such a sweet idea. I do have a question for you though.
Yeah.
Has the gift amount kept up with inflation, or are you still gifting?
You know, it's a very fair question. No, it hasn't.
Okay.
But I will say that I'm pretty sure we went slightly over our budget this time by a little.
Yeah.
But yeah, you know what? We should give a little inflation boost. I think that's a good I think that's a good idea
Yeah, because I
because
just
it
think
hasn't.
about how the things that young women want changes price wise so significantly as they get older. I mean, I'm a significantly older than my sister. Like I'm almost 7 years older than she is. So I remember like buying her things as she got older. And when they're younger, it's like smaller things. And then they get older and they want the same things you want. Like they want the
Mhm.
same shoes and the same handbag and you're shopping in the same
Mhm.
places. And I'm like, wait, hold on. What
Yeah.
happened to what was the store my sister's up? The Limited Two. Like what
Claire's.
happened to right. What happened to that? So that's why I was just wondering, like, has their budget
Yeah.
increased over the years?
Oh yeah, and we've talked about this. Like it's amazing how young women are so in tune with like skincare and like nice
Yes.
hair and nice makeup, like all the things that you get at Sephora. And you and I work and make money, so we can afford to buy those things. But these girls, like, they'll save up their allowance, they'll save up the cash that they get for birthdays and holidays and things. But yeah, it's or they'll get like my older niece wanted this kind of perfume
Mhm.
that I actually have. And she was giving me a hug a couple weeks ago. She's like, "Oh, Auntie Ante, what is that perfume that you're wearing?" And so she was like, "Ooh, I'm gonna get that on the shopping spree." But of course, a full bottle is like $100.
Yeah,
That
I'm
would have
like, it's a
blown her
designer
entire budget.
it's a
Yeah,
designer fragrance, yeah.
exactly. That would have blown her whole budget. But there was a travel version that was like $30.
Oh,
So
that's
she got the
fantastic.
travel version. Yeah, she's able to still get it and wear it. So
Yeah.
anyway,
Oh, yeah.
super fun.
Yeah, the new generation of young women is very different, very
I can't
different.
wait
They
to
want
see what their skin is gonna look like when they're 50. Like
they better be flawless for the
I
amount of
know.
time they spend in Sephora, no wrinkles at all.
Exactly. And the money. The
Right.
the the serums they've been using since they were like 10.
That's a very, very fun idea.
Yeah, super fun. I love it. Love our time together.
Yeah.
All right, my dear, let's get into the topic because we all have those Aunt Bettys, right? Who are gonna be
Yeah.
at the we're gonna be at the dinner table around the holidays, and some comments are gonna come up. So I am gonna start with a comment that you all may hear around the dinner
Mhm.
table, and we are going to let Atrisa give you some actual data. You are gonna sound so smart. People are gonna be like, "Whoa, what have you been reading and listening to? How do you know so much information?" So Teresa, let's pretend I'm Aunt Betty. I've had some
Okay.
wine and I'm like, oh my God, the stock market is in a bubble. It is about to burst. It's going to go into the tubes. Like it's just, there's no way it could keep going up.
Yeah, and a lot of people, Aunt Betty, are concerned about the same thing, and I get it. So the way we would offer a rebuttal to this is that it's not unlikely that people are concerned, especially given the rise of the Magnificent Seven. So those are those large seven companies of the S&P 500 that have been on, we probably can call it meteoric rise, right, for the last couple of years. But the fundamentals of the market don't suggest that there's a bubble that's about to burst, at least not yet, right? We can't ever say that it won't ever happen, but that's not what the fundamentals are telling us now. So we'll give you some points to share. One, there has been an asset bubble almost every decade. Right? Every decade we experience something similar. And every time there are signs, there are warning signs that these things are happening and things may be overheated and about to burst. So, one of those things is what we call PE, or price to earnings ratio. And not to get too far into the geek weeds, it's basically a measure of valuations, right? It's comparing the actual value of a company to its stock price. That's really what it's doing, the stock price versus the actual earnings of a company. And usually, before things get overheated, those PE ratios rise to unsustainable levels. Okay. So while the S&P 500's current price to earnings ratio is about 22 times, it's not anywhere close to the PE of 27 times back in 1999, right before the dot-com bubble burst. And you guys may remember that when everybody was inventing a website that was not connected to any real company, a lot of those earnings were based just on speculation, right? There was no fundamental value to companies. And that is not the case that we are seeing right now. The other thing is a more probably fun, simple rule of thumb to share with people at the dinner table is that a double is a bubble. So historically, whenever the S&P 500 doubles in 3 years or less, we usually see stock prices decline shortly thereafter. This is also true about the NASDAQ, which is a composite index that's heavily focused on tech companies like those Magnificent Seven we talked about. And over any rolling 1 year period, if the NASDAQ doubles, then we also see a decline in stock prices. And this is going back 5 decades, right, of historical data. But even the NASDAQ right now is up, and I say only, and I want to put only in quotation marks, right? Because only is subjective, but is only up about 37% over the last year. So we're really not seeing data that supports a bubble ready to burst. So again, we acknowledge the concern because things have been on a tear all year. I mean, how many all-time highs have we had already in the S&P this year? Like 30
Oh no,
plus.
it's like over 50 at this point.
Right. So it's not strange that people would be concerned, right? That at some point this rise has got to stop. And I wouldn't say that they're wrong. I just don't
Right.
know that the fundamentals support a bubble that's about to pop for any of us. But that's just
Yeah.
some things you can share to bring people down to earth when we start talking about really exaggerative comments about the market.
Yeah, absolutely. And, another thing you could just kind of sprinkle in there is to give a little bit of a caveat, right? We do not think that there is a bubble that is going to burst. However, market pullbacks are very normal. So, and to be expected. And if you look back to like 1980, the average pullback intra-year in the S&P 500 has been an average of about 14%. So, Aunt Betty, we don't expect, a bubble to burst all of a sudden, but if we see a pullback towards the beginning of the year, because we have now had two super strong years in the market, that would be very expected. So, no, we're not expecting a crash, but if we see the market go down, 10, 15%, well within the range of normal.
Right. It is not abnormal. And again, like we've mentioned on several of these podcast episodes, corrections are a good thing for investors, right? It's an opportunity to get in for all the people who feel like they missed it, right? I missed it. Corrections are opportunities to get in at a discounted price. That's the way we
Yeah,
want to look at it.
absolutely. So next,
Hmm.
let's say that Aunt Betty comes at you with,
Hmm.
oh my God, the economy is in the toilet. Things are terrible.
Yes.
So we want to share some actual data with you. This is, I think, sentiment that has been very interesting that we as advisors and people who are really tuned in to what's going on in the markets have been fascinated by, I would say, over the last year or so. So, the economy, if you look at the data, is absolutely slowing. However, the economy is not in the toilet, quite the opposite. We're going to share a few because there are many economic data points we could point to, but we're going to share a few big key economic data points that you can share that prove that the economy is not currently in the toilet. Number one, if we look at measures like GDP, and by the way, GDP is the market value of all the goods and services produced within a certain period of time in the United States. So it's the aggregate of those goods and services produced. If you look at the third quarter GDP number for 2024, it showed an annual growth rate of 2.8% year over year. That is not terrible considering the long term average has been about 3.2%. So we're at 2.8, long term average 3.2, not super far away from that long term average. Next, we can point to the unemployment rate. That is the most recent data point that we got is the unemployment rate is at 4.2%, so just over 4, and that is historically very low. So if you look at the long-term average of unemployment, it's been 5.68%, which dates back to 1948. So quite long-term data. And just as a reminder, in case it's been a while since you were in an econ class, the unemployment rate measures the unemployed people as a percentage of the labor force. So it does not count babies, children who can't work. It does not count people who are retired and they're not looking for a job. It just counts people who are unemployed, but typically would be part of the workforce. So we've seen the unemployment number tick up a little, yes, but it is nowhere near a peak that we saw back in 2020 with the pandemic, and it's still at a very healthy rate.
Absolutely. And a lot of the unemployment numbers are affected by other factors as well, right? We talk about labor force and what things change in the labor force, people coming in and going out, boomers retiring, even periods of time where people are just not working due to temporary situations, right? Like weather, hurricanes, things shut down and have people out of work. So there's a lot of factors at play, but we're still below that average. So yeah, people are still working and things are still okay.
Yes, exactly. All right, next, inflation. Oh my gosh, it's killing me. All right, Aunt Betty, you're not actually totally wrong about
She's
this.
not totally
So
wrong about that one.
she's not totally wrong. So give her another sip of wine and just let her know that she's not far off. Okay. So, and this is, I think, a huge thing that comes up for the consumer because economists and the Federal Reserve, who controls, short-term interest rates, they're pointing to the rate of inflation that has come down precipitously. So the peak of inflation hit back in 2022 was close to 9% on the consumer price index, which was very, very high. We actually just got a CPI number on December 11th, which came in at 2.7%. So currently 2.7%, was at a peak of almost 9. So rate is in fact coming down. So when you hear economists or Federal Reserve officials talk about how inflation is improving, they're not wrong. However, as consumers, the way we think about inflation is, oh my gosh, things are on average about 20% more expensive now than they were pre-pandemic. We don't care if the rate of inflation is coming down. My eggs are 20% more expensive than they were. I'm vegan, I don't even eat eggs, but an example. So this is why we're saying they're not necessarily wrong. However, the good news is we are seeing the rate of inflation come down. The other really important piece that we are watching is wage growth, which is basically like the inflation of wages, how much your wages go up, is now exceeding the rate of inflation and has exceeded the rate of inflation for a while now. And that is very positive. That means that all of our wages are now finally
Right.
beating inflation again, whereas they were under performing inflation prior.
Yeah, and again, we expect every year. I mean, even when we are planning, right, as financial planners, we always assume some sort of rate of growth in your expenses. We're going to assume things are going to get more expensive. So that's not abnormal, but it's very nice to see that now at least what workers are earning is keeping up with that rate of inflation, which it was not doing a couple of years ago. But I shared with a client, I did a quick trip to Savannah for Thanksgiving. I was there for like 48 hours. That 2-day trip on a flight that would have cost me probably $325 a few years ago was almost double that, right?
Yeah.
So again, but it hasn't stopped people from traveling. The airports were packed, right?
Yes.
So again, things are more expensive, but as consumers, we're also still consuming because we've been able to afford those increases.
Right. Exactly. All right. I think we left the best
Yeah,
question for last, most controversial
maybe
question
the
for
most
last.
controversial one. Yes, I want to be
I'm
very
glad.
delicate with this one.
Yeah. I'm glad you're the one answering this. But Teresa, the new administration is going to kill the stock market. Or Teresa, the new administration is going to be great for the stock market. What do you have to say about
Right.
that?
Okay. So this is the touchy one. So we want to be delicate. First rule, though, with family dinners, try to leave the politics out of it if you can. If you can just ignore Aunt Betty in that situation, that's probably where we're going to start. Just ignore her and try to change the subject. But if she is insistent, then we want to just offer you some perspective, is what I would call it. And what we want to remind you of is that no matter which side of the aisle your political beliefs fall, the S&P 500, which is the US stock market, has posted positive returns across most administrations with few exceptions. And this is going back to 1929. So the exceptions in those times have been administrations that ended in deep recessions. So think Hoover, think Nixon, think George W. Bush, right? So if the administration ended in a deep recession, then they probably did not post positive returns. But all other administrations going back to 1929 have posted positive returns and actually have had annualized returns of nearly 10%. So, what we try to remind people, and that's not to say that the administration and its policies doesn't have an impact on the economy, it doesn't have an impact on specific investments, particularly like bonds, right? US Treasury bonds are going to be directly impacted by policy passed in presidential administrations. But if you just remember that historically, the stock market has not really cared whether there's been a Republican or a Democratic administration in office. Even when we sort of dial in and look at 60-40 portfolios, right, or the average kind of balanced portfolio, going back to the 1800s, annualized returns have statistically no difference. I think there's a few basis points of difference in those annualized returns. So again, we don't want to say that there won't be an impact. Of course, we expect that as new administrations come in and policy changes, it's going to have impact on the economy and what happens. But as far as the stock market returns are expected, we don't see that there's any different in what a Republican president and what a Democratic offers as far as annualized returns are concerned. So we try to remind investors, if you can, as much as possible, try to keep your politics out of your portfolio. Because long-term investment returns, especially long-term stock returns, are going to outperform other asset classes over any long-term 10-year, let's talk about 10-year periods, right? And it doesn't matter who's in office at that point. So we just want to give some perspective to that when Aunt Betty wants to start talking about how the new administration is going to make the market take off or how it's going to make the market tank. Really, the US market doesn't really care if it's a
Yeah.
Republican or a Democratic administration in office.
Yeah, absolutely. And I think it's also an important reminder of why we buy stocks and what it
Mm-hmm.
means to buy stocks. And when we're buying stocks, we are basically buying future profits, cash flows of some of the, if we're talking about something like the S&P 500 index, for example, some of the best, most well-run companies in the entire world. So when we buy stocks, we are actually buying companies. And if you think about, especially in the United States, the innovation that we have consistently had and the ability for companies to pivot and change course when things change. For the most part, most of these great companies have been able to do that. And we believe that in any sort of political situation, any sort of different administration, that companies will continue to evolve and pivot as they need to, if they need to, from a policy perspective. So also just remember when we're buying stocks, like some people think of, oh, the stock market as this like very abstract thing. Like, no, we're buying companies at the end of the day, and we're buying some of the best companies in the world. And we believe that the best companies in the world will continue to increase their profits and increase their cash flow over time. And that is what we are buying as investors.
Yeah, absolutely. So again, tell Aunt Betty to cool it on the political talk around the around the holiday feast table.
Yes.
But yeah, I think it's there's less to be concerned about as far as your portfolio returns are concerned. I'm not saying that they're not things that we should keep an eye on, that we should be mindful of, that we should be watching. But long-term investors, I think, have less to worry about when it comes to the presidential administration.
Yes, exactly. All right, y'all. We believe in you. We believe in you. Let us know how this goes. So we always ask for you to send in your questions to
Hmm.
podcast at curoprivatewealth.com. But if you have a success story of a funny conversation with one of your family members, or you busted out, some statistic or data point that we shared with you, please share that with us. So send those emails to podcast at curoprivatewealth.com. Also, feel free to leave a note in the reviews wherever you're
Hmm.
listening to this. If you learned something that you were able to then share with someone else, we would love to hear from you. So, hopefully, this episode was helpful from that standpoint. All right, Atrisa, what do you have for our closing thought of the day?
All right. So this one is actually just like a quick, fun idea that I heard about. So you guys may not know this. Anne knows this about me. I am a vision board person. I like vision boards. I like doing them as an activity in the end or start of the year with my friends. I, have invited them over, provided the magazines and the scissors and the glue, and we've built out vision boards for the year. But I did see a really cute idea on TikTok. And I don't remember the creator who posted it, so I'm sorry. But what she did last year was create a vision bingo card. So she put out sort of little goals, build it out like a bingo card. And then every time she accomplished one, she marked it off. And she felt like it was more motivating for her because she was competitive and she wanted to get bingo throughout the year. So there were things that she was constantly trying to get marked off on her bingo card. I thought that was such a cute and fun idea. So if any of
Love
my
that.
friends are listening, be ready. We're doing bingo cards
Yes,
at the start
bingo
of the
vision
year.
boards.
Bingo vision boards. But I just thought it was such a great idea because I do think that you can manifest things in your life, right? If you put them in front of you and you see them and you keep them right and at top of mind, like things that you're trying to accomplish and sort of attain throughout the year, it can be helpful. So any little fun way you can do it. I mean, I've created vision boards in Pinterest, right? I made them digital Pinterest boards before. I've done actual physical boards. I think the bingo card is a really fun idea, especially to do it with a group of family or friends.
I love, love, love that. I think it's phenomenal.
I thought
And
it was
for
such a
people
cute
who are
idea.
motivated, yeah, for people who are motivated by like crossing things off, which you and I
Yes.
both are, I can see how that would be even more than just like looking at a vision board. Where do you keep your vision board? Like, where do you store it in your house?
Yeah. So right now it's in my bedroom. So I just kind
Okay.
of have it, up near my mirror, like on
Yeah.
on a dresser, sort of. I don't actually tack it to the wall just because I couldn't imagine putting that up on my wall. But I think it does need to be in a place where it's present, right? Where you can see it.
Yes, you see it.
Yeah, I think I've seen, like, when we did smaller ones, I think one of my friends had it up on a refrigerator because it was like small enough to
Mm,
kind of be magnetized, clipped to a magnet on the refrigerator. But wherever you can put it where you can constantly see it, or
yeah.
see it at least periodically, I think is helpful.
Yeah, I agree. Otherwise, it's not like
Yeah,
top
out
of
of
mind.
sight, out of mind, right?
Exactly. Yeah.
Yeah.
Awesome. I love that.
Yeah.
That's great.
Thought it was
I do
fun.
have I have a vision board. I don't do a new one every year. I probably do a new
Mhm.
one every few years, but I love the idea of the sort of gamifying it with a
Yeah.
bingo card. Very
Yeah.
cool. All right, my closing thought of the day is it's a tad bit somber. Art Cashin, who was a legend on Wall Street, passed away a couple of weeks ago at the age of 83. And he headed up for at least the past, I want to say 3 decades. I think he was on Wall Street for like 60 years plus or something like that. But recently, he headed up floor operations for UBS at the New York Stock Exchange. And I was at UBS, and I remember I never got the chance to meet Art, but I did read his commentary every single day called Cashin's Comments. I think it went out to millions of people, and he wrote about what was going on in the markets literally every single day for 40 years. And I wanted to share one of my favorite Art Cashin stories with you all. And it actually ties back to something that you said a moment ago, Atrisa. But he shared a story about the Cuban Missile Crisis. He was, I think, 19 or 20 and already on Wall Street. And there was speculation that, Russia had pulled the trigger on these missiles and they were like flying in the air. And so he was scrambling as a young trader to try to put a trade on, basically shorting, going against, believing that the market was going to go down as a result of this missile crisis. And so he's scrambling, but he can't really get any trades on. And this is way before electronic trading, so you're
Right.
calling and trying to
Yeah.
get these trades put on. He can't make it happen, so he scrambles and he goes down to where he knows one of his mentors is at a bar, somewhere near
That
the New
sounds
York
about
Stock
right for
Exchange.
that
Sounds
time,
about right.
on Wall
Exactly. Yeah.
Street.
Yeah. So he finds his mentor, this guy named Jack. I think he called him like Professor Jack. And he's like, Jack, missiles are flying in the air and I'm trying to put on this trade. And Jack's like, kid, sit down, buy me a drink. And he's like, I want you to remember this. When the missiles are flying, you buy, you don't sell.
Mm.
And Art's like, what do you mean you buy? You don't sell. Missiles are flying. The market's about to crash. And he's like, listen, you buy because if you're wrong, then we're going to be dead anyway. If the missiles are flying, we're all dying. But if you're right, that's going to be like potentially the trade of your career. So you said earlier, Teresa, when things are down, you actually want to consider buying. So I want us all to think about when the missiles are flying, consider buying.
Yeah, I like that.
Yeah, that is
Yeah.
my closing quote. And just massive respect to Art, and
Mhm.
rest in peace. And just an amazing man. Again, I didn't have a chance to meet him, but everything I ever read about him was like he was loved by all people, bulls, bears, Republicans, Democrats. Everybody had really nice things to say about him. So just wanted to share that
Yeah,
little
it's a very
tribute.
nice thought.
All right. Well, that officially wraps us for the week. We wish all of you a very happy holiday season.
Okay.
We'll be back
Mhm.
with you before the official end of the year and the beginning of 2025, but super honored as always to spend some time with you. We hope this episode was helpful. Share feedback, and until next time.
Live richly.